what do you think is going to be the straw that breaks the camel's back for the sort of general population?
I think the next wave of inflation is what's going to break the camel's back. If you look at, especially in the DXY for the dollar, a lot of the inflation that took place in the United States, as bad as it was, took place during a time where the value of the dollar was increasing. So imagine that, the value of the dollar relative to other fiat currencies was going up, but at the same time, inflation was going up. So what does that mean? That means that the value that was being driven into the dollar was actually working against inflation. It was, as the dollar got stronger, inflation was having a harder time going up. Well, this next round of inflation is going to take place during a time when interest rates are being lowered, not being higher, because it was the talk about raising interest rates and then the actual most aggressive interest rate hike in modern history that drove that temporary value, that temporary purchasing power into the dollar to help fight against the inflationary pressures. But we are nowhere, there is a lag time between inflation and M2 money supply. And we are nowhere near adjusting to the 40% increase. So we have only got the first wave of inflation, and we only have this first break because they raised the interest rates. They didn't raise the interest rates, this would have just continued going. So because they raised the interest rates, we had a disinflationary period, which isn't deflation, it just means prices are rising slower. So it's still inflation. But now when they are forced to pivot in the near future and start lowering rates, and the value of DXY starts going down, and inflation is still happening because they're creating more and more currency units, inflation is going to go up twice as fast and twice as high. Inflation was already in the teens when you look at real inflation. Inflation is going to go into the mid to high 20s on this next wave. And that's really going to scare people, because when things go from like $5 to $6, most people honestly, they probably don't notice. But when things go from $5 to $6 and then from $6 to $9, well, now it's like, whoa, wait a second. I'm not eating the same amount of meals. The meals that I am eating now only have one side. I used to be able to buy 4 cars for my tires. Now I have to wait to get a buy two, get two. I mean, like, all these things are going to become way more evident in this next wave of inflation, especially, like I said, when they lower rates and the value of the dollar starts to fall. That's going to be boosting the inflationary pressure. So you'll have the natural inflationary pressure being boosted by the devaluation of the dollar. Whereas in the first wave, we had the natural inflationary pressure being held down by the strength of the dollar. And that, in my opinion, is going to be the straw that breaks the camel's back.